Let's talk about finding comfortable account balances to trade with. There's a few different levels I kind of think of when it comes to trading with account balances and what you should kind of have within your account as far as money goes, or the amount of money you should have in those accounts. Now, personally, I like to split up certain things, like having one for an IRA, another one for trading or day trading, and another one for longer term or swing positions. So how you do it is up to you, and how you manage it is up to you. And everybody's in a different situation. So if your account balance is, let's say, $0 to $1,000, you may only be able to have one account, and it's only feasible for you to trade very limited shares. And different things happen at different account levels. So let me go over a couple different things, and these are not in stone. It's going to also depend on the stocks that you trade. So for example, if you're trading a $500 or $700 stock versus a $20 stock, things may be different at these different account levels, because obviously at $500,000 or more, or let's say $1 million of a company that's only trading at 20 cents a share or $1 a share, you're going to be able to buy a lot more shares, and you may actually be able to move that stock quite heavily. Whereas, at $0 to $1,000 in your account balance, you won't even budge that stock, or it'll just be a normal buy. Typically, institutions will move the stock, and you're actually just the one riding the wave. But if you're at a $500,000 level and you spend $400,000 or $500,000 on one stock, then you may actually move it, and it's something to be aware of. Now, granted, if you buy a $700 stock when you're $500,000 in account, you may not really move it that much. So that's why it really depends on the stock price as well, depending on your account value. So let's go over a couple of these, and this might kind of help you figure out how much you should invest. Now, $0 to $1,000, if your account is limited at that, you're gonna have trouble finding brokers and stuff. And something to understand is, before you hit this $25,000 limit, anything less than $25,000, there's a law that basically states that you can't do day trades or 3 trades per every 5 days or something like that. And you might want to double check that on one of my other videos, which I go in more detail. But basically, if you're doing $25,000 or less, you're gonna have to have a cap to the amount of trades that you can do on a per 5-day period. So if you fall between $0 to $1,000, you'll really only be able to trade a few hundred shares of certain stocks, or maybe a few shares of certain stocks, and your risk is very limited. And you want to have a comfortable amount account to where if you go down and dip to, let's say, $800 or $500, that you're still going to be able to trade. Now, $5,000 to $20,000, it's a much better cushion, and that's basically typically what a lot of people start out with, because $5,000 is around the minimal requirement for most brokers these days. Sometimes it's $2,500. You're gonna have to double check depending on which broker you go with, and they change from time to time. But $5,000 to $20,000 is typically about the average starting price or account value that most people start with. And this gives you a lot of room or freedom to buy, 100 shares of this or 200 shares of that. It gives you a little bit of room to play with. Unfortunately, you're still limited to, that $25,000 rule, to where you can't do day trading. So if you're looking to day trade, you're not going to really be able to do it until you hit that $25,000 limit. You'll still be able to do options, you can do Forex, a lot of other things, but you'll still be limited to the day trading rules. So it's just, again, something that you have to manage and be very cautious and careful of how you manage your risk, and how you manage your trades. You just have to watch out. And typically you can't really buy a lot of shares of high value or high expensive stocks. So not that that's a big deal, because the bigger stocks move more, but you have to give them more room to play. Now, at $25,000 to $150,000, this is kind of where more professionals start to get in, or where more experienced traders to get in, or people who are retired, or people that have a larger account value are a lot more comfortable at this level. However, that doesn't mean you can't take a huge loss, because just like going from $1,000 to $800, you can do that very quickly if you buy a lot of shares of something of low value and it just dips really quick. The same thing here, if you buy $100,000 of one stock and it tanks $4 or $5, you could be down to $80,000 within 1 to 2 days. So again, it's all about managing your trades and managing your risks and knowing how to trade properly, and knowing how to build up your experience before you actually trade. So no matter what account balance you have, you can still be in the same position at a 20-50% loss, just like you would at $1,000 or $150,000. The main difference is that you really, at about $150,000 and especially $500,000, is you actually tend to start moving certain stocks a little bit. And I don't say a lot, but you actually start moving them slightly a little bit more, especially if you're putting in, $300,000 to $400,000 for one stock. So when you get to that level, and your account balance is, let's say, 3 to 5 million, especially at this level, you may want to buy $200,000 to $300,000 worth of one stock because your account value is 5 million. So if you have 4 or 5 stocks, it's not going to really kill you or dampen your account value too much. But that's when you start moving the market, and it's something to start being careful about and watching how you trade, and so something to really just take note of. So, I don't like to move the market. I like to be down stealth mode. So you have to really know what you're doing when you get to that level, and be really cautious with your stops and enter maybe consistently or gradually over time, as opposed to entering it at one time. Like when you have less than $1,000 or even $5,000 to $20,000, you can buy as many shares as you want right away in the blink of an eye, and you won't really move the market. If you buy $5 million worth of one stock in one day right away, you may actually move it and may actually make it pop or jump or gap up. So you may want to wait for a basing pattern, buy some on the way up, then it goes up, bases again, buy a little more on the way up, bases again, buy a little bit more. So in 3 to 4 runs, you actually bought on the way up, and now you accumulated your position, you have your position ready, and then once it climbs a little bit within a week, a month, however long it takes, on the way down, you start selling bits and bits, or you exit quickly, whatever your strategy is. But that's the main thing, and that's the important thing to understand about higher account values, is that you start moving the market. With lower account values, you have to manage your risk a lot more, and you're going to be paying a lot more on commissions or percentage of commissions, because $5 to $10 to trade here is a lot larger percent than if you're trading $500,000 and you're only paying $10 to $20 commission. So again, it's just something that you have to watch your expenses, your bid-ask prices with lower account values. Now me, if you haven't watched my how to trade or how to get into trading exercise video, as I would recommend, and this is just a quickie on it, make sure when you're first starting to trade, whether you're trading with a $500,000 account or a $1,000 account, if you're just starting to trade just not by paper trading, but trade 3 to 5 shares of whatever stock you want to trade, or the types of stocks you want to trade. Just trade 3 to 5 shares, maybe 10 shares at most, and that way you can enter and exit positions just as you would with 100 shares or 1,000 shares, but it gives you the experience, it gives you the anxiety, the rush, you're able to control your emotions a lot better. It gives you that natural feel to trading. Now, yes, you will probably lose out on most of them because of commissions, because you're just trading such a limited share amount. But negate the commissions, and yes, I'm telling you to actually do real live trading, and you might lose money just because you're paying so much on commissions and you're not buying enough shares. But it's going to teach you so much more, because now you're focused on real trading. Because paper trading, the executions are not always the same as real trading. Sometimes it's harder to get in one stock than another. So that's just my tip and strategy as far as learning to trade. But as far as account balances go, these are just some of the main ones that I look at. Remember that the higher the value of your account and the more you put into one stock, you can actually move the market a lot more. And you just have to be really, really careful about that. And if you have a lower account value, you really can't day trade until you hit the $25,000 mark. And if you're dealing with less than $5,000, then you just have to be really cautious with your money, with what you're buying, and the way you're purchasing things. So enter them gradually. You don't have to buy 20, 30 stocks. You just need 1 or 2 stocks a year to actually make it a good year for you. Anyways, thanks for watching.